Tom Lee just said if you buy into this stock right now, you could potentially make millions of dollars if you hold it till after the election. And I put my money where my mouth is. This is my $833,000 trading account. I just made 2 really big plays, so I'm going to play the interview right now with Tom Lee. There's something really big brewing in the stock market right now. I made a big position on it. Maybe you'll want to make a big position on it too. So here's the interview with Tom right now, and then we'll go into this portfolio.
The last time you were on, I think your basic thesis was that market's still solid through the end of the year, but in the meantime, there could be some volatility and maybe even a pullback. Now I think you're saying it's been more stable than what you're expecting, and it has to do with liquidity and cash on the sidelines more than anything else.
Yes, that's right. You're right. We've kind of been sort of, I think, fooled by seasonality because we thought markets would be hesitant before, the elections, and it's October. But we've seen this market be incredibly resilient. So I've underestimated how strong this market's been. I think it really shows macro data is becoming less important, and it's now the fact that a lot of cash has been on the sidelines. For the last 2 years, investors expected a recession, or many thought when the curve uninverts, we got a recession. But at the end of the day, there's $6 trillion of cash on the sidelines, and October has turned out to be a great month.
So there's always going to be experts predicting that there's going to be a stock market crash. They've been doing that for years on end. When has it not worked out to invest in America, to invest in, for example, the S&P 500 or the NASDAQ in the long run? When would you have ever lost money if you would have done that? So this right here is a chart of the NASDAQ in the last 5 years. The ticker for what this is tracking is QQQ. Triple Q tracks the NASDAQ. So look at all these dips right here. This was a COVID dip right here. This dip that happened right here was when the Fed started tightening interest rates. But imagine if you would have listened to all the negative news articles right here at the bottom when the dip happened for COVID. The Triple Q was priced at $170 per share. Right now it's almost $500 per share. Imagine if you would have listened to all the bears in the bottom of the bear market right there. You would have gotten smoked. Imagine if you would have listened to all the bears right here saying, oh, this is going to be the next 1929. Oh, this is the next 1999. The lost decade is coming. All this crazy stuff is going to happen. But imagine if you would have listened to any of the negative news articles that happened in this period right here. Imagine if you would have sold when Triple Q was at $266 a share. But instead of freaking out and panic selling right here on the bottom like most people do, smart investors, they were buying right here. This is when I was buying too. I did a lot of stock options trades at the bottom of the market right here. And that's how I made so much money on this upswing right here. So you guys know that I do a lot of trading with stock options. And the number one rule with trading stock options is do not get wiped out. Do not do any trade that could potentially wipe you out. Because if you do stock options incorrectly, you probably will get wiped out. I know so many people that come to me and they say, Brandon, I lost $1 million in the stock market in the last 2 years. People literally come to me and tell me this stuff. They say, I lost $1 million. I lost 100K. I lost all my net worth in the stock market in the last 2 years. And I'm like, dude, the market's been on a crazy bull run the last couple years. How are you possibly losing money right now? Like, I feel like right now the trades that I've been doing, I'm literally taking candy from a kid in a candy store. Like, how are you losing money? And it really has a lot to do with people just gambling with options. I have the ability right now to go and place over $1 million worth of trades in my Charles Schwab account. Am I going to do that? No. But if I have a really compelling trade that I feel like I'm getting a super good discount on, where I have a lot of conviction in a play, I will definitely go hard in that play. But I will not just go shoot trades out there like I'm shooting darts at a wall and just hoping one of them gets a bullseye. I only make high conviction plays. That is the number one rule that I have with investing. So when the market takes a dip, that is a huge opportunity to swipe into the market and get in at a discount. And that's what I did. And from this time period of 2022 to currently, my net worth totally exploded because I got into the market when it was cheap and the market made a massive bounce back. I'm not gonna lie, I've probably made over $1 million in the 2022 stock market dip because of the plays that I made, because of the way that I positioned myself. I capitalized greatly on this bull market that we've had for the last couple years. You have to understand that smart money comes in when there's a discount and dumb money goes out of the market when there's a discount. Dumb money FOMO's out, smart money FOMO's in. It's the famous Warren Buffett quote where he says, be greedy when everybody else is fearful. So everybody is fearful when the market takes a dip. That is when you should go be greedy. That is when you should go buy quality companies and ETFs at a discount. But there was so much negative news priced into the stock market in the last couple years, so there's so much money on the sidelines. But what's going to happen is, eventually interest rates are going to continue to fall, and they're not going to be able to get any yield in a savings account, with a bond, or with a CD. So really the only game in town is going to be in the stock market. So people are going to continue to put money into the stock market. And in just a second, we're going to go into the trade that you can make to potentially make a crap ton of money on what is happening in the stock market right now. This is a massive generational shift, and times like this right now that are happening do not come around often. So definitely watch this video all the way to the end. You don't want to miss anything.
Many days, we're even down triple digits in the futures, only to end up 250 or 300 points by the end of the session. And with no backdrop of positive news, nothing to account for it, other than it seems like there's money on the sidelines that's coming in.
I mean, it feels like investors are underinvested in stocks. I think there's people who've dreaded 2024, thinking this is the year we slip into a recession, and instead, and we're seeing it with earnings, companies have been really resilient.
Yeah, we waited and waited and waited to retest the lows a couple of times in 2022 and 2023, and people weren't bullish at all. We didn't get great advances, and now it's almost unstoppable, and nothing seems to be able to knock it off a track.
This is what happens when you read news articles from CNBC or Yahoo Finance, where the journalist comes out and says, oh, the bear market's going to come, it's going to come, stay in cash, go buy bonds, go buy CDs, whatever you want to do. How has that worked out? You got totally smoked. 2023, I made a 75% ROI. 2024, so far year to date, I'm up over 50%. This is what happens when you buy stocks and do stock options the right way. When I find companies that I feel like are undervalued, I will go sell puts on them. I will go buy calls on them. That is exactly what I teach in my course. It's 35% off right now. Check the link below. It's going to totally change your life and teach you how to do this stuff the right way.
Whether Trump or Harris wins, I think stocks do pretty well next year. Sort of a post-election rally.
So Tom Lee's calling for a post-election rally. I personally think this is possible too, because after the election is done, the market no longer has to price in the worst case scenario from Harris and the worst case scenario from Trump. They only have to price in a worst case scenario from one candidate versus the other. So after the election is done, the market could really focus on one thing, and when that happens, there's so much more clarity in what we could see going forward into the stock market. So when there's more clarity and certainty, that cash that is on the sideline is probably going to come in and buy stocks. And guess what happens when all that money on the sidelines flows into the stock market? Stock prices typically will go up. PE ratios will typically go higher because there's no other game in town, because you don't want to get a 2% bond, so they're going to say it's not even worth my time. I'm going to put my money into the stock market, and that's what pushes stock prices up. That's what pushes up valuations in the stock market. And that's kind of what we're seeing right now. The stock market has been on a tear the last couple years, because you guys know that the stock market is roughly 12 months forward looking. So the stock market is trying to price in what the interest rates are going to be 12 months from right now. And they are expected to be quite a bit lower. They're currently 5% right now. They're expected to be around 3% in a year from now. So if rates are going to be 3% 1 year from right now, you're going to get pretty much nothing on a bond, nothing on a CD, nothing on a savings account. So people are just getting ahead of that curve and putting money into the stock market. So I'm one of the few people on YouTube that actually show you into my trading account. So this account right here, we're going to dive into it right now. I'm going to show you the 2 big plays that I just made on this account, and we're going to talk about it. So the first company that I made a trade on is Microsoft, and the second company that I made a trade on is Google. So the first play that I just did is on Microsoft. So I sold some puts. I got credited to this account $9,649. I immediately get that money credited to my account, and guess what I did with that money? I took this cash and I went and bought more shares of EOO. Go look at my other YouTube videos. You'll see that I had under 500 shares of EOO in those previous videos, and now I have 506 because I took the premium that I received from selling this put on Microsoft and I went and bought more shares of it. So I sold it for $9,649. That was $9.65 per share that I received. Right now, I'm currently up $1,200 on that trade, and I sold the 350 put on Microsoft for $620 in 2025. So 350 is my strike price. You can see right here the 52-week high on Microsoft is $468 per share. You could also see on the chart right here, I bought out a little bit of a dip from the all-time high. Now, the number one reason why I made a trade on Microsoft is because right now I feel like Microsoft is trading below intrinsic value. So that's the number one thing that I do. If a stock is trading below intrinsic value, I will usually go sell a put contract on it. So if I feel like it's trading below intrinsic value right now at a price of $418 per share, imagine if it falls to $350 per share. I would love to take assignment of those shares at $350 per share. This is the difference between me and other investors. I will only make plays that are high confidence plays. I will only make plays that I have a lot of conviction in. So I do have a lot of conviction in this Microsoft play. That's why I did it. So that, of course, is the $1 million question. How do I know if a stock is cheap? How do I know if it's trading below intrinsic value? That is what I teach in my course. The link is below for that. It's 35% off right now. I promise you it is way cheaper than what you think. It's cheaper than pretty much every other course that's out there. So if you're interested in that, check out the link below. And the other play that I just made is on Google. So Google right now is trading at $165 per share. Guess what? I sold the 145 put on Google. I received $7,257 in premium on that play. My gain loss are pretty much flat on that play because I literally just opened up this play. So I did the 145 strike for $9.19 in 2025. Going back to what I said again on Microsoft, I feel like Google is trading below intrinsic value, so I sold the put on it. So when you add this stuff up, in the last 7 days, I made over $9,000 selling puts on Microsoft, and I made over $7,000 selling puts on Google. So when you add that up together, that's over $16,000 that I made in the last 7 days selling options, and I just go roll that money in to go buying more shares of the base of my portfolio. So those are the 2 plays that I made. I think there's a lot of opportunity in the market right now. Overall, I do think the market's a little bit lofty on valuations. The people in my premium Discord group, I've been talking about this for the last couple months. I do think the market's a little bit overvalued, but there are plays out there still to be made. I found Google, I found Microsoft, and I have my eyes on a few more trades in the upcoming week. We're just starting earnings season. There's a lot of opportunity out there right now. But please do not forget about rule number 1. Do not make any trade that you could potentially get wiped out on. Pretend that every trade that you're doing, you're putting your entire net worth into that trade. Are you going to treat it a little bit differently? Or are you going to treat it like you're shooting a dart at a wall, hoping that you catch the next 10x on a stock? Is it possible that you could do that? Of course. But is it possible that you could go buy a $2 lottery ticket and win $100 million? Of course. And when you see all these other people on YouTube or on X or on Instagram or wherever you're looking, and like, oh yeah, I 10x my money overnight, I bought this call and I made all this money, and you see that post and you just see dollar signs going on in your eyeballs, and it's like, I want to do that. And if you're a new investor, one of the riskiest things for new investors ever, I see this all the time, is a brand new investor. They'll go watch one YouTube video, they'll watch it for 10 minutes long, it'll say how to invest in the stock market, how to trade stock options, they'll go do it, and the next day they'll go make a trade, and maybe they do get lucky and double their money. Then they're gonna go to their wife and say, hey, I'm a pro stock trader, I know what I'm doing. Look here, I just made $1,000, I just turned $100 into $1,000, whatever their gain was. So they get overly confident, they take their entire net worth, their entire savings account, and they go pile it into this next trade, and they get totally wiped out. I do one-on-one calls with people, and you would be surprised how many people come to me and they say, I pretty much did exactly that. So that's why I'm talking about this in a video right now. I know I'm probably annoying you with this stuff, but I don't want you guys to get wiped out. I don't want you guys to lose money. So if you want to learn how I do this stuff, check out the link below for my course. And don't forget to like and subscribe. I drop a video every other day, and I'll see you in the next one.